Hey guys, Mongo here. Just wanted to touch on trading. Had a lot of questions recently, and a couple of people, even CryptoFace, have brought this up. And I found personally over the past several years that there's about 3 to 7 probable trades, highly probable trades happening once a week, every week. You can scalp trade, but if you don't have an exchange that has a good fees, I guess to say a fee policy in terms of makers and takers, you're going to pay a lot of money in fees, and that's going to eat into your profitability, and that's provided you're scalping and you're winning every trade. And I can tell you, even myself, I'm not. I'll use tight stop losses on some of this stuff, and I'm getting stopped out 2 out of every 4 times. So you're barely making enough in profit for scalping. But on most weeks, you have, let's say, worst case, two high probability trades in crypto. This is for Bitcoin, by the way. And then on a really good week, you have between 6 and 8 high probability trades where volatility is really high. Like we had in the past couple days. Today's Wednesday. On Monday, market pumped up. Tuesday, market dumped down. Last night, I'm driving into work now Wednesday morning, and it's kind of rising back up. So you're having that rotation effect before the bull market starts. So what I'm saying is you don't need to be, trading is also super time consuming. That's the reason why I don't do it. I'm too busy. But if you just set alarms, have a plan in place, and then look to execute that plan, if the rest of the parameters that you're watching is good, and you're likely going to see that your P&L go up over time instead of being flatlined or looking like the stock market where it's up and down all the time. So just wanted to lay that out. Again, I'm still relatively bullish. I think you can see whales right now are accumulating for the longer term. You had spot buying like crazy yesterday. A lot of that upward momentum. Actually, even on the downward drop, you had a lot of spot just buying nonstop. So a lot of big people on Coinbase, Kraken, and even Binance were buying spot like it's going out of style. So I just wanted to touch base with that. That's my thought process for the morning, since I didn't do a crypto talk on my drive-in the past 2 days. But I just wanted to touch base on the trading aspect. And I'll leave you with one last statistic. Basically, it's something like only 5% of traders outperform the S&P 500 / the average trader. So crypto is no different. If you're not in that top 5%, you're likely better off just buying and holding. And if you are going to do leverage trading, do definitely reduce your leverage. Start with 5x leverage and then move your way up from there. But again, I can't give financial advice on trades that I'm but I'm not really sure of. I'll use something lower like 40x leverage instead of 100x leverage. But again, the leverage doesn't really matter. In many cases, it's more about your risk management and how much of your portfolio are you willing to risk for a trade. So don't be silly. Don't do your whole account. Don't do anything crazy. Try to stay away from stuff like 200x leverage where you move a decimal point and you're liquidated. So all right, guys, nothing to say. It's financial advice. Best of luck. You want to find me, head over to Crypto Blackwall on Twitter and the Blockguard Discord. Thanks.